James, actually.
Okay.
Yeah.
All right. So here I am. This is Andrew Stotts and talking about careers in finance with James here. James, can you introduce yourself?
Hi, I'm James. Recent graduate, so for 2 years now, and right after that, I started a career in finance right away as a mutual fund salesman,
Mm,
and then move on to equity derivative trading desk at SCBS, and now right now
that's quite a different thing, huh?
quite a stark different actually, right?
Mm,
And
mm.
my third job now, which is my current job, is a continuation of what my second job was. So basically, it's back then it was a sell side trader. Now I'm a buy side trader. I'm in a proprietary firm now. So
Mm.
that's what I do now. Buying and selling, making profit for the company. Yeah.
And so maybe you could just explain the difference between what does proprietary mean and like what kind of institutions have proprietary?
Yeah. So we have to like separate it into like two sides first. So there's the sell side, and then there's the buy side. People usually think that banks have like they do all this stuff, like this complicated formula, buying and selling stuff, but that's not really what they do. Actually, they are the sell side traders. So basically, they structure products and then
Mm.
sell it to their customer, to their clients, usually high net worth or institutions,
Right.
and then they hedge those trades. Okay, and so that's how they make the trade.
Mm.
And that's the sell side trader stuff. But for the buy side trader, essentially you just do all these strategies, long shot strategies. So maybe you come up with a model, using some valuation techniques, and then you execute the trade, right?
Yep.
And make long shot, either way, try
Mm.
to make profit for the firm, essentially. Yes.
As opposed to kind of hedging a position for a product that a client may have, you're actually looking at the market and saying, how could we make money for this institution?
Yeah. It's sort of like that. So back then when I was at SCBS, so a local securities firm in Thailand.
Yep.
Uh, yeah, I was a junior equity derivative trader
Mm.
there. Essentially, what I did there was structure uh, derivative warrants, which many customers buy and sell in the secondary market.
Right.
And another product was the block trade. Okay, so derivative warrant is essentially sort of like an option. So we structure that out into secondary market, and when when traders buy our structured product, our
Yep.
TW, we hedge that by uh, buying equities in the market, to mitigate the risk, basically.
Mm. Mm.
Yeah,
And this,
and
I'm interested about this because when I started in the industry many years ago, we didn't have these kind of derivative warrants. In fact, the only
yeah,
warrants that we had were warrants that were issued by companies where, if executed, it would mean capital would go into the business. But these
yeah.
are not like that. Maybe you could just give some background about, is this just a game of people wanting something to gamble with, or is there value here?
Yeah, so back then in your time and also in my time, we still have the warrants that you see in the market,
Mm-hmm.
that issue companies. Those warrants are like, sort of like one way that one of the way that companies can raise their capital, through the market.
Yep.
And yeah, essentially it just goes straight to the company, if we buy those warrants and we exercise that. But for derivative warrants, it's almost like that. But in this case, securities company issue those warrants, and the money that you buy in these warrants, it doesn't really go to the company. It's just
Mm.
kind of, it's all about like, it's all about whether it is it worth buying this stuff. When it comes down to derivative, it's more like whether it is worth buying it.
Right.
If if you think that it's going to go up, for example, if you think that let's say this stock is going to go up from, you know, from here to there about 1%, instead of making just 1%, you can use derivative to leverage that up to, you know, 2 times, 5 times, 10 times, depends on the specs, right? So yeah, that's how it is. That's how like derivative warrant is really. It's all about not like traditional raising capital for the company anymore. Derivative warrants. It's more like whether you, it's like asking yourself whether this is something worth buying, you know, to capitalize on that gain. Yeah.
And I'm curious, you know, when you started interviewing and looking for a job in the industry, did you know that you had this interest already in things like, you know, derivative warrants and things like that? Or did you find that as you started, you know, your different jobs?
No, well, I have to say that I came from a very different background. Actually, I came from engineering. Yeah. And many respectable financiers in the industry, you know, most of them came from engineering as well. But what really curious me was the complexity of the market. It's kind of like intriguing, you know, and so that's how I got into the market in the first place. I was sure back then that I wasn't going to go for the, you know, for the engineering field. I'm not pursuing this career, you know, path. So the thing that intrigued me at that time was the stock market. And so that's how I start, you know, learning, studying, and actually take an exam to get licensed to work in the industry. So that's how I got into this career path. And I wasn't really, my first job, like what I said, like what I mentioned, was a sales side. I was a sales, mutual fund sales.
Right.
And totally not something that I had, you know, in my mind. At that time, I was straight on to become a trader. That's what I thought at that time. And it actually, you know, I actually ended up in sales instead. So, but I have to say that it wasn't really a bad decision. Sales taught me a lot about, you know, like other skills that traders may not have, you know. Yeah.
Definitely.
Some of the, yeah, like selling skills, soft skills. That's what I mean. Communication skills. Those are really important, well, in this period. Yeah. And it's not just about technical jargon anymore. It's also about, you know, being able to communicate your ideas, and you can achieve that through like soft skills. And so that was not really a bad decision at that time, you know, that I landed my first job as a sales. Yeah.
As you get older in the industry, I bet that you'll find that there'll be a time that you start to really need those salespeople to reach out, you know, when you want to raise funds or when you want to bring an instrument or when you want to bring an idea out there. Without the salespeople, you're not going anywhere.
Yeah. And I mean, like traders, we basically almost always stay in like this confined room, you know, like small cramped confined room space, right? And have no chance at all to meet clients. But we have to understand the client's mind, and that is like a very conflicting idea, because you have to understand the clients, but you don't get to see the clients. And those people are the one to do that. And you sort of have to talk with the sales guys and understand them, because they are the one who have the client's ideas now, right? But the only way to do that effectively is for traders, you know, like or people who have no contact with clients at all, to understand the sales skill, the communication skills, you know, to and I felt really thankful that I landed my first job as a sales, because when I went on to become like an equity derivative trader, right, it really helped me in like communicating with my colleagues, not just with my traders people, but also with the sales people, what the clients want, you know. What needs, what is that specification, you know. It's really helpful. Yeah.
And when you're work as an equity derivatives trader originally, is that the
Yeah.
same type of thing you're doing now, or you're doing a different type of trading?
Totally different. Like what I mentioned, my second job at that time was totally just structuring products. So come up with specs and then hedge those products. You know, not not making money for the bank. Okay, because we have no proprietary authority over that. Yeah. So but
now you're developing strategies to try
so
to make
yes,
money for the institution. How hard is
yeah.
that?
It's pretty tough because it's a red ocean in this industry right now. Started many years ago, since I think 2008.
Yep.
Yeah, since 2008. You know, the industry has been in a structural decline. You know, like funds closing. You know, no more proprietary for the banking industry. So it was in a structural decline, and so the only way to survive is to become, essentially, is to be better than the other in the industry. And so it was like a red ocean at this time. But basically what I'm doing right now is sorry, let me sharpen my phone first. Yeah. Okay, so essentially what we are doing right now, we develop strategies, and it's not just strategies for traditional assets, it's everything. So traditional assets in my sense is just stocks, you know, FX, bonds. Those are like traditional assets. But you know, alternative assets could include, for example, what we are doing right now is also digital assets. So cryptocurrencies is also in our, you know, in our scan.
Right.
Yeah, in our interest. So basically, it's rather tough because everyone is competing to acquire new clients, and basically we all have the same, you know, clients target. And so we always have to come up with new strategies that are better than the others.
Right.
And so you know, diversify our assets, not just between traditional assets, but assets that have potential to make excess return alpha for clients. Yeah, we are always interested. Yes.
It's you know, there's an interesting word in that's sometimes used in the world of finances. It's like the manufacturers. The manufacturers are the people who are making strategies, creating products, and then those are then promoted and introduced to the client. And if they're interesting, then the client, you know, if the client's interested, then, you know, they take it from there. But it is a very competitive space. I wonder, let me ask you a question about trading in general. And that is, how important is risk management? You know, a lot of people, young people, they think, yeah, I want to learn how to trade and all that. And then they don't understand risk management. I'm just curious your own experience with risk management.
Yeah. Yeah, I learned that through many painful lessons, you know, especially in my early career, in my, you know, not when I started in my career space, but even before then, because I started trading in 2013. So that was, I was in my freshman. Yeah, my freshman year. So I started then, and you know, I learned a pretty painful lesson about risk management a lot, because that time the market crashed, I think, from the top all the way down to, from I think 1700, the set index, to 1200. So that was a painful lesson, and I learned my lesson well, because people just keep thinking that, especially young people, that they can just, you know, read some books that some, you know, educators provide them, right? They think that if they read these books, they are, you know, snap of the finger, and
put
then
the
they
money
are
in.
put the money in. They have a gold, you know, a Midas gold hand right now, and they can just go into the market, start minting some money. But that's because it's not just about reading books. It's also about experience. And more than that, it's actually the mindset, of trading.
Right.
It's not just risk management. It's on top of that, it's the mindset to, to stay persistent in your trade, to have conviction in your trade, how to stay convinced when the market is keep going down, or how to stay sane, when market is just keep crashing like that, when you start losing money, when you start seeing a fluctuation in your P&L. It's all about the mindset. You just need to have a good trading mindset, and then after that, then you can go start learning new skills, especially risk management, and then finally the trading itself. So people backward, right? They think that they need to learn how to come up with good buying and selling signals first. They need all these technical education first before going into the risk thing and also the mind thing. But it's actually, the other way around. It's the mind first, then have a sense of good understanding of risk, and then the trading. So people always have it backward.
It's so exciting. And if you when you're starting off in your career, you should look for someone with a hairstyle like mine, and then they can help you understand about risk. Because I think that as I've gotten older, what I've realized is that the people who last the longest in the industry are the ones that are the best risk managers.
Yes.
You can always come up with ideas and strategies, and some will work, some won't. But the people that can protect the downside are the people that end up surviving.
Yeah. People just think it all in terms of an absolute term, right? They never think of it in terms of multiple. So they think of reward, but it's actually, how long you last, it's the reward to risk. Okay. And control the risk well, you can actually maximize the return in the process. It maximize that reward to risk ratio. People just keep thinking in term in an absolute term, the dollar term. So they all care about that, and it's a risky mindset. Yes.
Well, I have two other questions that I want to ask you, and the one of them is about engineer, and the other one is that I want to ask first is this one. That a lot of people come to me and they tell me that they're trading in Forex. And I ask them, what do you know about Forex? Nothing, but I'm taking some online course and Forex, and it's awesome, and I'm going to make tons of money in Forex. And I'm just curious, you're a real trader out there. What would you say to these people?
I would say essentially any products in the world, you can trade them. It's okay. You can trade them all. You can just trade one specific product. That's fine. It doesn't really matter, but it's all about having a good mindset about trading first. Essentially, you just have to ask yourself first why you start trading in the first place. Because as soon as you get into the market, you just need to have that mindset that the money is already gone, right? And people don't have that. So it's all sort of like the mindset thing, all sort of mindset things that you need to get it right first. And if you have that right, any products in the world, you can trade them. And also, complement to that, you also need to have a good risk management strategies. Essentially, you have let's say $1,000 and put it all in on leverage in FX. You just can't do that. It's just nuts, right? And that's not a good mindset. So your mindset is ruined in the first place. You shouldn't start trading at all. So essentially, if you have a good mindset, I'm not really concerned whether you go on a roller coaster ride with FX market or conservative type with the bonds. It doesn't matter. You just need to understand the risk and have a good mindset. That's it.
Great.
Yeah.
The last question I have for you is, I've had a lot of students that have come to the Valuation Masterclass and tell me I'm an engineer, but I really like finance and I want to learn. And I've seen them build great careers and all that. I'm just curious from your own experience, what was different from what you perceived when you were studying engineering and you looked at the financial world. You know,
Yeah.
you didn't know the financial world that well, but you knew engineering relatively well. Now that you understand the financial world, what advice would you give for young engineer who's thinking, I want to go into the financial world?
Yeah. This can be, I think this have to like separate into two sections. The first one is like, you really have to ask yourself whether you really want to get into it. Like some people just think that, oh, some people use some personal will, the younglings, they use their personal will to see the world. They don't use it from those who have experience. And they just think that if I continue to pursue a career in engineering, it's doomed for me. I'm not good at it. But then they always go straight to something that they think they can do. So usually finance, right? It's relatively the most compatible between engineering and finance. So they think that they're going to be good in finance as well. But some people that I know, when they got into finance and they used to be an engineer, they think that it's not for me too. So they ended up found themselves not compatible with either one, not neither engineering nor finance. So essentially, this is like a personal question that you have to ask yourself first, whether you really want to get into it, or was it just because you think that you are not going to be good at engineering? Yeah, you really need to ask yourself that.
Get your motives right.
Yes, exactly. Get your motives right, because what I keep getting back, the feedback from my juniors, those who want to get into finance or other fields that are not engineering, let's say maybe economics as well.
Yep.
They're saying that it's the incentive that they are going to get, that
Gonna get rich.
them. Yeah, gonna get rich and gonna get like loads of bonus, but I have to say that time has passed. That's that's day of the past. It's nothing like that anymore. And even if you're gonna get that, you really need to be persistent, get your education right, and it takes years of experience to get to that level. Yep. It's not an overnight miracle. And so get your motive right, because incentive alone is not enough to propel you long in the career of finance. It takes more than that. It's not just incentive. It's interest, passion, many more things.
One other thing is that when you look at the world of engineering, there's a lot of formulas, there's a lot of laws, and there's things that are pretty stable. The law of gravity, as an example, it doesn't change. And sometimes when you're very structured in the way that you studied, and you look at the financial market, at first you think, oh yeah, lots of calculations and all of that. But then you find out that actually the financial world is much more complex than just knowing some formulas. What was your experience in that area, coming from engineering to finance, about, what you thought it was and what it is, or, that type of thing?
Yeah. Like what I said, in 2013, I got intrigued, into the market because one of my cousin, he said that you're good with maths, and that's it. And that's how I got into the market. And at first I thought, the market, the financial market, the stock market, any markets are just like bunches of numbers, and you can just compute, punch it in some formula, and then you can come up with some ideas. That's it alone. But as it turned out, I have seen a pretty, you could say it's kind of like a roller coaster ride, up and down, and there is no logic in that. There is no formula in the world that can really actually explain what was going on in there, because if you think it in terms of like a function, yeah, well, essentially there might be parameters associated with the financial market that can be, you know, that can be quantized, right? But then there are some parameters also that cannot be quantized, and that's the part that, you know, in my, you know, up to now, like for the past 2 years, when I really got into the financial world, really intrigued me. Those parameters, actually, those variables actually intrigue me more than those that can be, you know, quantized, that can be quantitatively computed. So it's not just about, you know, looking in one perspective alone, the financial market, and it's not just, you know, from two dimensions alone. It's more than that. It's multi-dimensional views that you need to have in your mind about the financial world.
And I think that's that complexity is what makes finance such a exciting, challenging place, because it's numbers, but it's also trying to understand the mind of the market. And I know, you know, a great example is the example of a beauty pageant, you know, and if there's a beauty pageant and, you know, women or men are going across the stage and you're in the back of the room and you're with your friend and you're going to say, ooh, which one is most beautiful? And I'm going to put down a bet with my friend about which one is most beautiful. The reality is you're not really betting about what you shouldn't be betting about what you think is beautiful. You need to think about what the judges are going to perceive as beautiful. And many people never even make that connection. And I remember when I first started in the industry, I was always amazed that there were certain people with a lot of experience that they could understand how the market would generally react in more situations than, you know, than I could. And that's part of the mind of the market. And I think something that you gain over time with experience.
Yes. I think early on when you start in your career, usually you think it in all the terms, you think it all in scientific way, you know, in a scientific method, right? Very quantitative. But as time goes by, when you gain more experience, it's more of a qualitative side. So that's kind of like what they say, you know, trading is not just science, it's an art as well. And so you need to have a combination of those. And exactly on that idea, like the beauty pageant. Yeah. And I mean, I have seen many assets, many stocks that if you compute them up, they have no value, but people just keep buying it and it just keep going up and baffle many of us, you know, in the industry. Yeah. So it's kind of like, you also need to have that sort of mindset too. You know, trade just numbers, it's arts as well.
Well, great. I just want to thank you for sharing, you know, your experience and your wisdom. I know it's going to help particularly young engineers who are thinking about going into the world of finance, but also people that are thinking about going into trading and other things. I think you've given us a lot of valuable stuff. So thank you very much.
Thank you very much. And just to wrap this up, one thing, I think, you know, one skills that you shouldn't neglect, you know, in the industry is try to learn new skills that will be relevant to the future industry. Okay, not just it's not going to be just modelings and coming up with the greatest valuation, you know, models. It's not going to be just that anymore. It's also coming up with new skills, learn new skills that will be relevant to the future, you know, of the industry. So let's say, for example, machine learning, coding, and also soft. Those are the things that I think will be really useful for those who, you know, who will pursue a career in finance, you know, of the future. Yes.
Great advice. Great advice. In fact, the whole stuff about valuation and all that is something that you kind of learn one time and it doesn't change much. It's kind of foundational stuff. but all the other
Mhm.
stuff is what you really start to add to make you more valuable. So great advice.
Mm.
All right.
Yes.
Well, thank you very much.
Thank you, Andrew.
Yep. Yep.